I definitely agree about innovation. The greatest companies and the greatest innovation did occur in downturns. And if we think that we are at the end of the IT innovation, we are completely wrong. I mean, just if you look at cloud computing, if you look at SaaS, if you look at PDAs, we are really just scratching the surface right now. That's not even talking about the response to climate change and the clean tech innovation that is occurring. We are scratching the surface right now. And there's so much to do. There's so much that is happening right now in the response to climate change. And if you look at climate change, even if you leave all the soft issues aside right now and just look at climate change as a mean to save money, because it's a lot about cost reduction that goes directly to the bottom line, which is very important these days. You can see that a lot of the enabling mechanisms to respond to climate change from a business response perspective is the innovation of new technologies in clean tech. And that goes all the way from energy supply to energy efficiency to water and waste. I was asked to speak about venture capital and not private equity, and there is a difference between the two, although the line is blurry, and it's blurry in emerging markets, and it's blurry in certain segments of the industry, such as clean tech. But before that, I want to give you some data about IPOs, because the venture capital model cannot exist without IPOs. The venture capital model, which is not the same as private equity, need to have IPOs in order to exist. But I'll just give you the numbers of the first 11 months of 2008, and what we see is a significant increase around the globe, regardless if it's mature markets or emerging markets. And just to give you some numbers, in the 11 months of this year, we saw 745 IPOs compared to almost 1,800 last year. This year, IPOs raised around the globe about $95 billion compared to $257 billion in the same period of last year. In all of 2007, which was basically a record year for IPOs, there were 1,980 IPOs around the globe, which raised $287 billion. And if we talk about the globalization, the capital markets are fully globalized now. This is basically the lowest point in 13 years of IPOs around the globe. And I'm sure that if we look at 1995, if it was 1995 today, we would say, oh, basically 1995 was a good year. But the world has changed dramatically in the last 13 years, and our expectations and perceptions are different, and the type of IPOs are different, and the players are different, and the whole rules of the games are different. And that's why to be at the lowest point right now and to be compared to 1995 is not such a good thing. The emerging markets went down as well, as I said, and they went down, if you look at the 11 months of 2007, they were 365 IPOs that raised $107 billion, and at the first 11 months of 2008, there were only 163 IPOs that raised $28 billion, so a major decrease. If you look at the regions around the globe, and you can see the shift that Carlos was talking, within the 11 months of 2008, Asia represented by 337 IPOs, Europe by 161 IPOs, and North America by only 91 IPOs. So the shift that we have seen in the last 5 years from west to east is still there. We saw different sectors this year of IPOs. If in the last 4 or 5 years we saw a lot of financials, obviously this year we didn't see any strong financial IPOs. The sectors that led IPOs were materials, industrials, and technology. The largest IPO this year was Visa from the United States, which raised $20 billion, but it was really exception to the rule this year because the second largest IPO this year was from China, which was China Railway Construction, which raised only $6 billion, so the gap is quite big. And the third largest IPO was OGX from Brazil. It raised about $4 billion IPO. We also look, when we do the IPOs, at what we call the top 20 club, and we look at the top 20 IPOs around the globe, which is very interesting to see the different trends. And I'm sure if we look back 15 years ago, most of those top 20 IPOs came from the West, while if we look today, at 2008, 15 out of the 20 came from emerging markets. But the threshold dropped dramatically from last year to this year. So if in last year you had to raise at least $1.9 billion in order to get into the club, this year you had to raise only $850 million in order to get into the club. So a significant decrease. You probably will not guess what is the second country in the world by number of IPOs this year, which was Poland. And that's another interesting country to continue to watch. If we talk about venture capital, it's an important statistics because it dictates what the VCs are doing around the globe in terms of their investment strategy, which is dictated by the exit strategy. So if innovation is the new currency of competition, and I truly believe in it, I think that you cannot have successful innovation clusters around the globe, especially those that are technology-based, without a successful venture capital ecosystem. And there are very few successful ecosystems of venture capital around the globe. You can go from Silicon Valley to Boston, to Israel, to China, and that's basically it. Yes, there is VC in Europe. Yes, there is VC in India, but those are not yet successful VC clusters. I'll leave you one more food of thought before I go into the 3 slides that I have, is that it's interesting that we're trying to look into the future while around this room, and I apologize if I'm making a mistake, but there is no CEO or any other C-level executive who is under 30 years old. And we, including myself, do not understand the next generation, or do not fully understand the next generation. We do not fully have the knowledge about how they behave, how they consume, what are the habits, how they're going to behave when they're going to be CEOs. We're just not there. So just food for thought for banking there for the future. But I'll share with you a story that one of my VC friends told me, that he sent an email to his son who is in high school. And his son, instead of replying to the email, just click on the reply button in his email software, whatever it is. He preferred to go to Facebook and send him an email from Facebook. And I think, Chris, you shared with me the statistics. If you look at the statistics of email usage with the young generation, actually the usage is going down because email is too slow for them. And while the usage within our generation is going up. So with this, let me just give you a few words about venture capital. So this is the VC investments around the globe. If the font is too small, the blue is the US, yellow is Europe, the red is China, Israel is green, and India is the darker blue. Yes, the US is still the very dominant country in terms of venture capital, and within that Silicon Valley is the dominant region. But it's a bit misleading over here because you can think that the pace is still good in 08 compared to 07, but usually venture capital lag about 1 or 2 quarters after capital markets. So we expect to see a decrease in this quarter in Q4 and definitely in Q1 of next year. If we look at the, what makes a successful venture capital hotbed around the globe, and I'm going back to what I said before about the different geographies. These are our criteria in terms of what we have learned, Ernst, working with entrepreneurs for so many years. First of all, you need capital sources. If it's VC, or actually I would say even if it's the right venture capital, because not every venture capital is the right venture capital. Private equity, government, R&D funding, public capital markets that are working, and so on. Intellectual capital, universities, research institutions, and pillar companies. What I mean pillar companies, the HPs, the Intels of the world, the GEs, and so on. Usually when they set up a R&D center, sooner or later, this research center will spin off entrepreneurs. Social dynamics, entrepreneurial spirit, and risk-taking, new business formations, acceptance of wealth creation, and acceptance of failure. These are all very important criteria to create a vibrant, successful, robust venture capital ecosystem. Tax and legal regulatory environment. Do we have IP rights, the right tax incentives, stock options, etc. Infrastructure, the presence of sophisticated advisors, from law firms to accounting firms, banking systems, and so on, as well as physical infrastructure, transportation, communication, and so on. Market, do we have a large domestic market for technology? Do we have early adopters of innovative products and services? And the last one, is it an attractive environment to live in for the individual? Do we have the right quality of life? Do we have entrepreneurial role models and success story? Is there political stability? And one time when I asked Dick Kramlich from NEA, who's one of the great grandfathers of venture capital around the globe, he was joking and said that, why Silicon Valley is Silicon Valley? It's mainly because it's a great place to live in. But if you take all these, 7 bullet points, and let's say you rate it from 1 to 5 and put Silicon Valley as 5 in all of them, think how you would rate the other geographies, from China to Israel to Europe to India. And there's really no other venture capital, ecosystems around the globe. So at the end, I will do a quick scan around the globe and tell you what I think about those different clusters. But I think we do see a migration of venture capital from west to east. So what are the current issues for venture capital? Global versus local. And my argument today is that if you're a mainstream VC, not a small boutique one or a niche one, you have to be global. You cannot be local. Yes, if take the Sequoia model, for example, there are different models for how you globalize your fund. It doesn't mean that you have to do frequent flyer miles and invest remotely. That's actually a recipe for failure. But if the world is global today, and as Carlos said, globalization won, and I definitely agree with that, you cannot ignore the rest of the world it doesn't matter where you are. So the VCs must be global in order to provide the right advice and the right leadership with their portfolio companies. Now, there are various models how to do it. There are different success stories. We'll not go into that. It also depends if it's a venture capital early stage or venture capital late stage. Obviously, if it's an early stage, it is a local game because you need to be with your CEO almost on a daily basis, but you do need to have a global network. Either you have other branches of your fund in other places around the globe, or you open other funds under the name brand, or you have affiliations, or you have other networks. The early stage model, it's a challenge today, and it's a challenge today for a couple of reasons. Even if you look at 2007, which was a record year of IPOs, and you compare the VC-backed IPOs to the level that we had before the bubble of 99 and 2000. So if you look at 94, 95, 96, 97, and you look at 2005, 2006, 2007, the number of IPOs that were VC-backed were basically half in the last 3 years compared to the mid-90s. And as I said before, venture capital model, the early stage model, cannot exist without having IPOs. And so if in the mid-90s we expected to see about 30% of VC-backed exits as IPOs, it was only about 15% in the last 3 years. The other thing is that the time between initial investment to exit in the mature markets today is more than 7 years. That's a lot of time. It needs a lot of capital and a lot of patience. So the early stage model is, at least in the mature markets, is a bit shaky right now. And I think we will see out of this financial crisis, as well as out of clean tech, new financial models coming out of that. And in order to support it, if you look at the IRR returns of VCs in the United States, if you take out the top percentage, the Sequoias, the Kleiners of the world, the Mayfields, et cetera, it's actually negative returns, not positive. Clean tech is another issue. It's today almost 15% of capital invested by venture capital around the globe, compared to less than 2% in 2002. But it's a different game. You cannot replicate your knowledge from IT and apply it to clean tech, because clean tech is an umbrella. It goes all the way from algae technology to wind technologies to energy efficiency to water to waste. Sometimes it's a commodity game, it's a different capital game, it's a different exit game. And there are different players, not just the VCs. So it's very difficult to take a fund that was very successful in the IT world and say, oh, they will be successful also in clean tech, and they're trying to replicate the same model. So clean tech is an issue, and right now, not that I doubt that it will be a huge success. I do believe it's going to be very successful, although we are going to see correction in the clean tech market in the next in the next year. Emerging markets, you cannot exist without them. So it's very clear that the VCs need to be there, and whatever the model that they choose is the right model for them. It's their choice. But there are many models, as I said before, that they can choose in order to be in existence in emerging markets. And exits, as I mentioned before, is another big issue right now, especially because there are no IPOs and there are also no M&As. So the exits are pretty much on stop right now. The level of IPOs went down significantly. The level of M&As went down significantly. And the time between initial investment to exit has increased to more than 7 years. There are also another issue that with the limited partners, we don't know, we haven't seen yet, but I would anticipate capital calling by the LPs very soon. Because their whole, venture capital out of the private equity asset class within their diversified portfolio is relatively small, but when the other asset classes are shrinking, obviously this is growing. So they need to rebalance their portfolio, and one of the ways to do it is to get out of some of the VCs. And I think some of the endowments, some of the pension funds will do it. So if we do a quick scan around the globe in terms of the different clusters, I think that, and I'll go from east to west. If you look at China, I think the real game actually started only last year. Baidu and Ctrip and Focus Media are great companies, but it was a different game when the VCs invested in those companies and when those companies went public. I think as of last year, the VCs in China are more sophisticated, there are larger funds, the rules of the games are different, and only in 5 to 7 years we will know who are the winning funds. So China, definitely going to be a successful venture capital ecosystem, but in terms of who are going to be the winning VCs over there, I'm not going to predict. Look at India, that's a major disappointment. The venture capital basically has not been able to break the ceiling of $1 billion investment per year in India for various reasons. Very different than private equity, which has been very successful in India. But the venture capital ecosystem in India is basically very small, is not developing at the pace that everyone thought it will develop. So right now, it's a major disappointment. Israel, probably the best ecosystem out of Silicon Valley, but has its own issues because Israel was very much with the orientation to the West, and they need how to shift orientation and have West and East as well, and not just a West orientation. But if you look at the innovation that's coming from Israel, it's just unbelievable. But also clean tech is bringing a new dimension over there, because if most of the Israeli technologies came from the military, if it's security or software or communication or semiconductors, clean tech is not coming from the military, it's coming from the universities. If we look at Europe, Europe really does not have a critical mass anywhere. It is, and there's no surprise, there's no Spanish VCs over here. But Europe suffer from some of the criteria that I gave you before. For example, the social dynamics, the willingness to take risk, the acceptance of failure does not exist in major parts of Europe. I remember when we gave a speech one time at the World Economic Forum, kind of a regional summit that was in Vienna, and one of the entrepreneurs raised his hand and said that if he fails in his venture, he can either go work for the government or give up his passport. And it is getting better, but it's not yet at the place that we want it to be. Also, the VCs in Europe suffer from being too small. They cannot support their companies throughout the life cycle now of being private for more than 7 years. And also the structure of the GPs was very different, and the profile of the GPs was very different than Silicon Valley. It is getting better, but we are far from being there yet. If you look at the United States, really except Boston and Silicon Valley, you cannot say that we have a robust venture capital ecosystem anywhere. Yes, you have in Southern California certain elements. Yes, you have in the Washington, D.C. area. Yes, you have in New Jersey a lot of biopharmaceuticals. But it's not as robust as Silicon Valley in terms of the market leaders that Silicon Valley has been able to produce. And if we talk about market leaders, which will be my final thought for today, if you look at every index, and I don't care which index you look, if it's the FTSE, or if it's NASDAQ, or if it's New York Stock Exchange, or if it's an emerging market exchange like the Bombay 100, or if it's a local index, if you look at the companies in each of these index over 5 years, you'll see that the churn is 30 to 35%. And it's very interesting to see because it is a valid statistics and a valid data around the globe. Doesn't matter how you look at it, how you slice it, the churn is every 5 years, about 30 to 35%. So there's always new market leaders that are coming in. Many of them are VC-backed. Some of them are not. Depends on the industry, depends on the country. But the innovation is, I think, is driving a lot of this and will continue to drive a lot of this in segments that we didn't see before. Thank you.
Thank you, Gil.